Welcome everybody to the Ready to Rebound series of webinars that Injury Board has been sponsoring and producing. My name is Mason. I'm going to be your facilitator today. For those that are new to the series, we've worked in 3 categories, and this has been a response to the COVID-19 pandemic crisis and the disruption that it's caused throughout our economy and really throughout the world. Injury Board as a group is a group of attorneys, and we'll hear more about them later, but they're leaders in their community and in their profession, and as a result have made a decision to take a proactive stance and help both their firms and also their communities get ready to go back to work and to make it through. So the series consists of essentially 3 tracks: remote work and small business, which is what we're doing today. There's a digital marketing strategies series, and client and community engagement. And so this is, again, one of several in a series that we've done so far. You can find this material if you're an Injury Board member at facebook.com/group/injuryboard. And today's sponsoring members, and we'll hear again more about Injury Board and from their founder and member Tom Young in just a moment. But we just wanted to say thank you, especially to these members who have both helped underwrite through their sponsorship of the group, but also who have made the special effort to invite friends and community members, co-businesses in the communities where they're located, to participate in this in an effort to help their communities get stronger. A special call out to Milestone, a longtime member, and they're actually going to be our presenters today. John and Dom are both the founder and the controller at Milestone Consulting LLC, and they'll introduce themselves in a moment, but we're also going to stop now and hear from Tom Young, who is the founder and a member, an attorney member at Injury Board. Tom, will you please introduce yourself and take us through a little bit about what Injury Board is and what is the impetus for this actual series, and introduce John and Dom, please.
Hey, sure. Thanks. Thanks, Mason. My name's Tom Young, and welcome everybody. Thanks for joining us this afternoon. I know all of you are anxious to hear from our panelists. I assume many of you are familiar by now with the SBA's Paycheck Protection Program, and we hope to give you some updates on how the processing of those applications is going, and when you can hopefully expect funds to flow. But as Mason alluded to, I am the founder of the Injury Board. We're a group of 100 some odd law firms across the country that are made up of attorneys who are either board certified or have been or currently are presidents of their state and local trial lawyer association. So we reached out to our membership and asked them to invite their local colleagues, small business owners, community leaders to this series of webinar series, because we know that we can't do what we do as professionals unless you guys can do what you normally do. So in an effort to help everyone get through the current situation and then be ready to, as we call it, ready to rebound, once we get the green light, we put this series together. And again, you can find a lot of these recordings on the Facebook page. I think it was facebook.com/group/injury board, and we'll continue to let you know about that particular link. But with that, I'd like to introduce John Baer, longtime Injury Board member, founder of Milestone Consulting. John specializes in settlement planning in civil trials, and is long-time supporter of the civil justice system. So Don and his colleague Dominic are going to walk us through the latest with the PPP. John?
Thank you, Tom. Again, my name is John Baer. I'm the CEO of Milestone. We're doing this webinar series because we think it can be helpful for small business owners that are out there in the country that just haven't gotten the straight answer. So we hope to be efficient with the information. A caveat is that we're not being paid or compensated in any way We're not an approved SBA lender. All the applications will need to go through a bank directly to, the SBA. So there's not any incentive, for us other than that we are trying to help our countrymen, figure out what the PPP program is, whether it's applicable for them in contrast to maybe the EIDL or a 7A, and going from there. There's been a lot of information, especially breaking over the last 5 days. When it went online April 3rd, Friday, information over the weekend, a lot of the banks, the larger banks, open for business in terms of their digital portals on Monday. But that may not be the case wherever you are. And so on behalf of all the injury board law firms, we're proud to present this in the context that we hope that it's helpful. There will be a Q&A, and Mason, just as a reminder, could you alert the audience to where they can submit questions briefly?
Yeah, absolutely. Thank you, John. And so for those who are familiar with Zoom, or maybe this is the first time using it, you should see a bar either at the bottom or at the top of your screen. And there's a section or an icon called Q&A. And that's the feature that we'll use to have questions. And so we'll ask you if you'll go ahead and start putting your most pressing question or questions in there. We have several hundred people on the call today. And so we'll try to theme those and serve them back into our speakers to make sure that they get answered to the best of our ability. But if you can start using that even now, and again, that'll be at the bottom of your screen or the top of your screen. And we're seeing folks actually use the chat feature, and we can do that, but there's a Q&A feature if you'll see that, and that's what we'd prefer. Thanks so much.
Thank you, Mason. With that, we'll get into the presentation. The real expert on this is Dom. He's a CPA. He's with our firm and has been at the highest levels with many other CPA firms. So with that, give him a strong introduction and let him get rolling.
I appreciate it, John. Thank you, everyone. Thank you, everyone, for coming. Hope we can answer a lot of your questions here today and give you a good overview and deeper dive into this Paycheck Protection Program. So let's jump in right to the deck. Okay, so I'm gonna try to keep it quick, maybe like a 2-minute introduction of the program. I'm sure a lot of us are familiar with it already. We'll spend some time digging into the monthly payroll calculation itself, including touching on some of the FAQs issued by the Treasury yesterday. We'll pause it for questions there most likely, then we'll dive into the application process a bit, and we'll talk a little bit to loan forgiveness at the end. So the total allocation for this program is $350 billion as of today. There's actually been some chatter that that number will be increased or supplemented by another bill here in the future. There was some news coming out of Congress saying another $250 billion, but as it stands today, it's $349 billion. Your business is eligible generally if you have less than 500 employees. Sole proprietorships and 1099 contractors are also eligible. Their application process is a little bit different, and it's starting actually this week, Friday. These loans don't require any collateral or personal guarantee of the owner or any of the partners, and you're going to apply for this loan through a qualified lender. We're recommending that you look for a bank that's worked with the SBA before. It's likely going to be a requirement that this is a bank you already do business with. The SBA website has a tool to help you find lenders in your area, but most bankers we've talked to so far require at least a checking account as of February 15th, 2020, or perhaps even be a credit customer already. We're recommending that you move quickly because it is first come, first served basis. This money, certainly the $350 billion, is likely to go quickly. That's why there's talks about adding more to it already. So we're recommending you move fast. Go to the next slide. Oh, we're already here, I'm sorry. The loan term, there's been a lot of numbers you might have heard. The final number they've settled on is 2 years at 1%. I think back on March 27th when the bill was first passed, which feels like an eternity ago, you may have heard 4%, you may have heard 0.5%, but we think we landed on 1% and a 6-month deferral. So that'll bring most people making their first payments back in October. This slide is a quick snapshot of some of the biggest players in the SBA banking sphere as of last year. That link, the 100 most active, you can actually click on it in the deck, and that'll bring you to a search result showing volume for each of your banks. So it's all the big big national, big regional banks, plus a couple specialty players in there as well. So the monthly payroll calculation. So let's just go through it step by step here. The first part is figuring out your salaries. This is going to include wages, it's going to include commissions, tips, vacation, family medical leave, sick leave, anything you're paying your employees for. There's also been recent guidance to say that you can use either your calendar year 2019 numbers or a trailing 12 month. So your most recent 52 or 26 or however your frequency of how you get paid, you can use either. This is cited specifically in the FAQ issued yesterday. So whatever is a higher number, you should be using that. We're going to talk to, I'll skip owner distributions here for a second. This is also, so the salary number is going to be for employees making less than $100,000. So if I have an employee making $120,000, only $100,000 can be included in that calculation. Group health insurance cost. So this is health insurance paid by the business. You're going to include that for your employees making over 100K as well. And this goes on top of that. So if we use my original 120K example, I include 100,000 of her salary in the calculation. Plus, if her health insurance costs the business 10 grand a year, I include that 10 as well for a total of 110,000. This is also going to include employer paid retirement benefits and state and local taxes, not FICA, not income tax. Those numbers would have been included in the salaries calc from the beginning of this. The Treasury has issued guidance saying to use gross payroll rather than net. So you're including taxes in that first part of the calculation. Distributions from owners. So that's probably at least ahead of time, and I'm already seeing questions come in here through now. It's the most common question we've gotten so far, and admittedly, this is the part of the guidance that hasn't had enough detail. So when the interim first rule was issued for this on April 3rd, when this program went live, there were many types of distributions that were not mentioned. They didn't cover all entities, so they didn't mention specifically single member LLCs. The guidance wasn't super clear on 1099 contractors. It wasn't clear on C Corps or S Corps. So there's a lot of confusion over the weekend. And I'll admit that there's some room for interpretation here. The way we're interpreting this is we are instructing people to include the earnings that you've paid self-employment taxes for. So distributions from a single member LLC in the regular course of business, so regular guaranteed payments, yes, we're including those. You pay self-employment tax on them. Distributions from a C Corp or S Corp, no. Partnership guaranteed payments, yes, you would include those. And sole proprietorship, yes, but the process is a little bit different. We'll touch on it in the application portion of this, but you're going to provide some different documentation than an LLC would. What is not includable? I think this goes on the next slide here, if I'm not mistaken. Yeah, so we mentioned health insurance and retirement benefits and tax already. We're excluding salary for employees greater than 100K, non-US employees, as well as sick leave related to COVID. There's additional tax credits available under section 7001 and 7003. Basically, if one of your employees comes down with COVID, you have tax credits that will help you out. And so this pay is not includable for this calculation. We'll go to the next slide. So your final result here for the 12-month, like an average 12 months payroll, you're going to multiply this by 2.5, a factor of 2.5. And this is designed to give you 8 weeks of payroll coverage starting from when you get the loan. I think we should maybe pause here. We have a number of questions coming in, and I think it'd be a good idea to go through some of the details of the calculation first before we jump into the application process. So John or Mason, I'm not sure who's.
Yeah, sure. We can take a quick stab at some of these. I'm going to read the question very quickly. Yep. We can get through them, but assuming you have a partnership or a corporate entity that's paying another corporate entity or a separate PC, it really should be at the corporate level where the compensation is being paid to individual owners. Next question. Monthly health insurance premiums, that was on the slide. So if the example is if you have an employee that's being paid $200,000, you would include the first 100,000 of that, but say their health insurance that you're paying for is another 15,000. That would gross up to 115 for that individual employee. Health insurance is also includable, in our opinion, for owners. Our 1099s included.
No, that was
excluded when calculating payroll, Dom.
Yeah, that was one of it was includable at first. So sometime between March 27th and today, that's been clarified. So
a church takes a PPP loan. What's the likelihood of forgiveness? We're going to get into forgiveness because essentially there's two applications. The application for the 2.5 times of the monthly trailing to get your actual loan amount. Once that's approved and you get an SBA loan number, you're not going to get any money if you don't get an SBA loan number. We know that. There's then 8 weeks to more than likely 12 weeks. There will be a forgiveness application. We'll get into that. Does a K-1 employee salary factor into payroll costs? We think yes. As a secondary delivery company, how do we help from get help from a bank when all of our contracts are just paper? I understand that question. Your contracts are paper. Even if you're paid as cash, it doesn't really matter how you're paid, regardless of your record keeping. There should be like a pro forma approach and some analysis to how you proof up compensation to people. But for example, if it's a pizza delivery company and all of their drivers are independent contractors, that they can't include the payments to them because 1099s and sole proprietors that you're making payments to are precluded. I'll get through some of the other questions as you're going, Dom.
Yeah,
sorry, the forgiveness program.
Back some quick answers too as I see them. So I may have gotten to you and I might not have. We have a lot of questions coming in, so trying to get to as many of them as we can. We can jump back to the deck here. I think we're going to move on, at least from the time being, for the monthly payroll calc. We'll try to get to as many of these questions as we can, but we'll talk a little bit more on the nuts and bolts of the application process. So as I mentioned before, you are likely to need an existing banking relationship. Now, that's not going to be with 100% certainty. I'm sure there are new players that are looking for business and looking for a way to get in. Many of the big banks that we've seen issue their own applications, or the ones that we have contacts with directly, they're requiring at least a checking account being established as of February 15th. So we haven't run into too many new ones yet. I would suggest if the bank you're working with isn't participating in this program and you're seeking out a new banking relationship to interface with this, to start today. Go to the SBA's website, search eligible lenders, and start making phone calls because that might be a bit tricky for you. You'll need some combination of federal tax forms 940, 941, or 944. You'll need either a summary or individual detail reports for each payroll in your covered period. I know with our bank, I sent both the individual biweekly detail in our case, as well as a summary. So if the banker's doing any due diligence, they can tie it out pretty easily. For independent contractors, this isn't going to be the focus of this presentation, but you'll need the 1099s for 2019. Self-employed individuals would need their Schedule C at a minimum. To prove for health insurance, you'll need those premiums invoices. Retirement plan contributions, you can get that likely from whoever's custody the assets, or perhaps just through payroll. All banks are going to have a slightly different process for this. Even so we have two banks, to speak for my own personal experience here. We have two banks that are both pretty prolific SBA lenders that we have relationships with. Even they had some nuance, some difference in their application. One of our banks insisted that we use 2019 data. This came out before the FAQ clarified guidance last night, so That bank went live Saturday night, the 4th. They were asking for 2019. Well, we had another bank asking for trailing 12. So it's likely to be of this flavor, but there might be a different combination or exact reports that they might ask for. And truthfully, if you get some advice from us or from someone else saying, hey, either you do or you don't need to provide this document, but the bank you work with asks for it, I mean, at the end of the day, they have final say, right? Each bank's going to have a little nuance to their process, a little bit of risk tolerance or how comfortable they are with certain documents. So if they're asking you for something, you're going to have to provide it.
Hey, Dom, this is John. One of the questions is around the certifications. Could you just touch based on every single application is going to require the business owner to certify what?
Yeah, so I should actually, I'm sorry, I don't have that. I'm pulling up if you go on the Treasury website and you drill into the section, there's a banner right at the top for COVID-19 and for the Paycheck Protection Program. They've had this sample application that many of you have probably seen. All these certifications on here will be on every bank application, and banks, there's some wiggle room they could add their own too. But you're certifying that you're eligible, that you have less than 500 employees, or you're an independent contractor, you're sole proprietor. You have to certify that you have been impacted by COVID in some way. That's obviously gray and a little vague. I think it's quite defensible to say that almost all of our businesses have been impacted by this in one way or another. Certainly law firms with the closures of courts, particularly contingency fee firms or that fee structure, certainly has been impacted. I think there's a lot of room for interpretation there. You also certify that the loan proceeds will be used for business purposes, for payroll, and we'll cover it a little bit more in the forgiveness part, but for rent and utilities and the things that are specifically asked to be covered, and that you're not performing any illegal activity, things like that. But if you want to see this list in completion, go to the Treasury's website and pull up the sample borrower application.
Thanks, Tom.
Should we jump into forgiveness here, or should we jump back to questions?
No, go ahead. Let's punch through forgiveness, and I'll
Great.
I'll circle back with questions. Thank you, Dom.
So forgiveness, I want to caveat this whole thing by saying, so this law was passed on March 27th. It's been about not quite 2 weeks yet. Guidance has been continually issued this whole process, including after the go live date. It is almost certain that more guidance will be issued by the Treasury over the next 2-3 months for this, and that parts of this this information is certainly possible to get stale over the next 2 or 3 months. So it's important for you or your CPA or your CFO, whoever's kind of keeping an eye on this, to be paying attention to the news and paying attention to the most recent developments by following the Treasury's website for primary sources. The AICPA has been consulted extensively in this process, and they're releasing press releases and other guidance as well. So stay current with that information. Forgiveness, so loan forgiveness will be provided for the sum of documented payroll costs, covered mortgage interest payments, rent payments, and utilities. The look back period is going to be 8 weeks whenever loan cash is actually received. So if we get our PPP approved next week Monday and cash hits the bank next week Monday, then that 8 weeks following is going to be the covered period for which, when we apply for forgiveness, end of June, beginning of July, somewhere in there, we're gonna have to prove out the expenses over that period. So forgivable expenses, payroll as defined earlier, that's going to be forgivable, of course. Keep in mind that's the primary reason, the primary motivation for this bill is to cover payroll. So in the government and the SBA's mind, a perfect world would be you get approved for a $200,000 loan and you use all $200,000 to pay payroll. You're also allowed to pay health insurance with it. You're allowed to pay interest on a mortgage with it, or interest on other existing debt. Now this mortgage, the debt, or rent rental agreements or leases that are covered, those need to be in place by February 15th. So you can't go rent a new space during this time period and get that covered by this loan. It had to be existing as of February 15th. Now, as far as, we've had a lot of questions on the likelihood of forgiveness. I'll give you a candid answer. So the number that's been thrown around in here, and they've mentioned it multiple places in the guidance the Treasury has, is they are seeking, at least right now, that 75% of this loan proceeds go towards payroll at a minimum. So your loan proceeds, and there's some confusion about this, I think. The proceeds of your loan is based on an average monthly payroll calculation that we went through before. It's not based on what your rent payment is right now. It's not based on utilities. Those aren't included into that factor for a reason. So let's say our average monthly payroll as calculated is $200,000. What the SBA is saying is over that 8-week period after you get the $200,000, you are allowed to use a portion of that for things like mortgage interest, for things like rent, for things like utilities. However, they want to see majority of this, 75% is the number they're throwing around, be covered towards payroll. So if let's say we get a $200,000 loan, and for one reason or another, just how the math works out on headcount, let's say we paid over the 8-week period, we paid $125,000 in payroll, and the rest of the money we used for other things as mentioned here. The SBA is saying right now that we are likely only going to forgive 75% of that $200,000. We want to see it used towards payroll. The rest, that unforgiven portion, you're going to have to pay back over 2 years at 1%. Now, the debt is still a great deal. Those are very friendly terms. But 75% is the number they're throwing around right now. And I would say that there's some chance that that changes over the next couple of months. The other major caveat here is that this is all predisposed to, you need to keep your payroll at or near the levels that it was previously. You can't slash salaries by more than 20%. You can't cut FTE or headcount. There's going to be, you're going to have to prove by doing a comparative. So either beginning of 2020 or beginning of 2019, depending on your business, and compare it to what the payroll was in that 8-week period. And they're going to compare your FTEs then to now. And if your FTEs are down, the short answer is that proportional decrease is not going to be forgivable in the loan. But the SBA is going to release more guidance in the future on this. There'll be more news to come as June quickly approaches, and we're into the next phase of this, which, I mean, most people haven't even gotten their money yet. But after we do, and after we get this cleaned up, then the next phase will be diving deeper into forgiveness.
Yeah, it's a great point. I just want to insert, Dom, thank you. We have a host of questions which we want to try and get to. But if you really step back and think about the spirit of what everyone is trying to do with this loan program and what the legislators intended is to keep people at work. And if you're a sole proprietor or you're an owner of a business, that you're important to the economy as well and keeping your business afloat, obviously. So on the point is, like, you have to have been in business as of February 15th of this year. So new businesses are precluded. That one of the key questions is, should we continue in the process with the SBA? And so there's no question in our minds that every application must go through a bank, that the SBA is not taking any direct applications. That was cleared up over the weekend. So with regard to the 75-25 or with regard to the 75%, you're going to be making representations as a business owner that you intend to keep your employees at Ford. But 8 weeks is a long time in this environment. And if that changes, it's going to calculate into the forgiveness portion of the application. So you apply for that loan for $200,000 and it's your intent to keep everybody employed. But then 3 or 4 weeks in, you make a change on that. That's going to be factored into the application for forgiveness and the underwriting process, which is going to be a changing landscape for the next 8 weeks, no question.
Hey, John and
We'll get to
Dom,
some-
let me jump in here with a couple of questions that have come up, and it talks about, I understand wages can include medical insurance payments pursuant to a firm plan. Partners receive these insurance benefits also. Can premium for partners' health insurance be included in the calculation? That'd be one.
Yes.
Okay. I thought I saw language that said it included state and local payroll taxes, but I never saw anything about whether this included federal payroll taxes or Social Security. Is that included in your calculations?
So you're including it in wages. You're counting gross wages at that first step of the monthly payroll calc, right? So you're capturing federal taxes there, and so you're not double counting them in the state or local, but they are captured. Yes.
Okay. And then one thing that let me ask you another one. As sole proprietor, can I add SEP contributions and monthly Medicare premiums paid?
Yes to the SEP, and I'm pretty sure yes to monthly Medicare, but honestly, I haven't seen anything specific on that yet.
Okay. Do you include employers add on the share of payroll?
Employers what?
It says add, ADD, the employers, the additional part of the employers. I think, and David, if you can maybe clarify for us, and we'll come back to that. But, one of the things, John and Dom, that's been consistent in the questions, and it sounds like we have a lot of folks on the call that are maybe falling into this category. I definitely want to know more. What do those smaller businesses look like? What do the single member LLCs look like? Single member business without employees. Can you walk us through a scenario where they're thinking through the PPP in relationship to their own business? And I'll follow up with some specific questions that have come out, but that's a really consistent theme. I don't have a lot of employees. I may not have any employees. I've seen. What can I qualify for this?
Yes, you can. This law, the spirit of this law, and forgive me for sounding high-minded by talking about the spirit of a law, but it is designed to help businesses like yours. I'm talking to single member LLCs and very small. It's the backbone of this country. It's the vast majority of businesses in this country. And those are the ones that the SBA are worried about closing doors during this crisis, however long it goes on. So yes, you are eligible. You are who this program is designed for, and you should be applying.
Okay, so hopefully that helped answer some questions that were out there. There was an interesting one that came in that was a very specific case. I'll read it to you. It essentially had to do with an employer that had businesses last year that might be in that qualifying period, but they don't now. So in the past 12 months, I had 5 W-2 employees. I went down to myself, meaning they're by themselves now on the payroll in September. Can I still include those past W-2 salaries in the payroll calculation?
Yes. Well, I'll say yes, you should. I would use 2019 and I would calculate your average monthly payroll then. Just assuming that the goal of this is to get the largest amount possible, right? So with that as our North Star, I'd say yes, include those salaries. The caveat is, so if I'll just make it easy numbers. So if your average payroll is $100,000 in 2019 and today it's only 20, keep in mind that while you might get loaned a larger amount of money, you're not going to have enough payroll for it to be forgiven, right? So in this example, I mean, it's extreme, but $20,000 monthly payroll for 8 weeks, 2 months is 40K. So 40K of that 100,000 will be forgivable, but the rest likely will not. So you'll be paying the rest back again at a good deal. But so keep in mind with the push-pull there. But by the rules, yes.
It could also be used to hire people back, or so talking about the use of the money. There's guidelines for the forgiveness application, but fundamentally, once the loan has been made, it's fundamentally up to the business owner to determine what's best for their business. And that's going to get factored into, if it's not for payroll, say it's for marketing, purposes to get your business back on its feet, it's not going to be forgiven, but it's still 1% money. So the most important thing is getting the calculations right for what you're applying for, and then maybe letting the dust settle, where it's going to fall on the forgiveness side. If you use it to maintain your employees and your staffing at current levels and avoid a layoff, then you're doing exactly what the government wants you to do, and it essentially, quote, free money if there's going to be a forgiveness for 100% of it.
Let me follow up with this question for you, gentlemen. So there's a number of questions that have come in about the process and being in the middle of the process. And maybe something is either changed where they wanted to amend something, or in one case, this is someone who's worked with Bank of America and wonders if they're even qualified to come in there, because while they have a banking relationship, a business banking relationship with B of A, they have, credit cards and maybe business cards in another bank. So can you walk us through, maybe again at a high level, that process, and then what needs to happen if you're in process and you need to make an amendment or you need to go back in and qualify something?
So 2 questions there. So if you need to make an amendment, I will speak from personal experience because I attempted to make an amendment on our application. First of all, the person, customer service or whoever's triaging requests, told me that, hey, don't make any changes to the application right now. Just gather your source documents and upload them, and someone will be in contact with you. So there's a chance that your bank, it's hard to answer this very definitively because your bank might have a slightly different process than my bank. But I think the bankers will work with you if there's a good faith error or change that needs to be made. I will say too, in the FAQ guidance that was issued last night, it is specifically mentioned that the fact that some of these things we've talked about so far have been clarified, or they weren't addressed on Friday, and some folks applied immediately on Friday, and then new guidance was issued as recently as last night, which may have contradicted what their application. The SBA said, hey, that's okay. You're expected to use the guidance that's available as of your application date. So if I applied first thing Friday or Saturday morning, whatever guidance that was available to me then, that's the standard that my application will be judged against. Just because there's a change or a clarification afterwards doesn't necessarily mean you're not in compliance, to say the least. So I took that as a bit of comfort in saying, okay, the SBA is trying to be adaptive here. They're trying to understand that we're trying to roll this out as quickly as possible, and there's going to be some kinks. There's going to be some things we need to iron out, and we're not trying to punish people who were diligent and applied as soon as they could by saying, hey, you released guidance after the fact, and now I was responsible enough to get my application. Sorry, responsible is not a good word for it, but get my application in right away, and now you're changing the rules on me. Now I have to submit it again. The SBA says you're not going to have to do that. I hope that helped.
And I would say specifically, Dom.
I can't hear you, John.
Sorry, I was going to say that the SBA is not going to be responsive enough to deal with resubmissions. So it's like it's a one-shot bullet. Once the application goes in, it is what it is on the date of the application. One of the questions was, can we resubmit when there was clarification on the trailing 12 versus 2019? Whatever, if you've already applied, it's our recommendation that let it lie, and it's going to come in as it is. I don't think there's a reapplication feature that's going to be available because the SBA is saying that it's already applied.
A quick question here that may help clarify for some folks. We applied for the EIDA loan on March 30th. Since we've already applied, should we not apply for PPP, essentially?
There's nothing precluding you from applying for both. On your PPP application, it does ask you if you've applied for an EIDL in between, I believe it says January 1st, 2020 through April 3rd. I'll admit I don't know what the bank's follow-up questions are going to be if you check that box yes. Admittedly, it didn't apply to our company. It didn't apply to, frankly, anyone else's that I had come into contact with. So I'm not sure what the bank's going to do on the follow-up, but the SBA has issued guidance saying you can apply for both. Now, what you might have to separately prove out, they'll probably check to make sure you're current. I suppose you said you applied in March, so you might not have even received funds yet. So let me backtrack on that. I'll keep it short and say I'm not sure what the bank will ask for, but it doesn't prevent you from applying for both. The law isn't meant to do that.
Can you address? Oh, sorry.
There's a string of questions specific to employers or owners. We're being redundant, so we don't have to type out the answers. But the question has been asked in a number of different forms. How should they calculate their partnership, ownership, employer percentages up to the 100K? Dom.
I'm sorry. Can you rephrase that question?
Just how does an employer include their compensation generally? Should they use bank records? Should they? Because there's not going to be proof of W-2 wages.
Yeah. So tax return would be the best proof.
What if they haven't filed their 2019?
In lieu of a tax return, yeah, I'd say the bank statements directly. I'm trying to think if there's something else I would use instead of, but that one might be tricky. That one you might have to do some legwork, and that answer might vary greatly from bank to bank. Keep in mind the banks don't. The guidance on this, it actually made me laugh when I read it the first time. The phrase minimal review is in instructions to the lender. And this is referring to, so banks, the broad question of what a bank wanted to know is, okay, our normal underwriting process, like we're going to do a lot of legwork verifying the data that you provide. It's not like your tax accountant who is generally going to rely on the documents that you give them. A banker who's underwriting debt to you is going to actually take the time and verify. It's going to be closer to an audit. So after this law was passed, banks were lining up asking this question: what kind of due diligence do we need to do? Like, are we responsible for underwriting and verifying the accuracy of every calculation, every prepared by client document? And the SBA's answer was, no, you're not. And then part that made me laugh was saying, you're responsible for doing a minimal review. Whatever minimal review means, I'm sure that means a different thing to all 200 some people who are in this room right now. I'm assuming they're not going to reperform all of your calculations. They're not going to, it's not going to be a full audit set of procedures, right? They're going to double check your work. Minimal review.
Two important questions I think are worth answering. If a business has already applied for the EIDA or they are considering it, so the two questions there, I would say because the EIDA is not forgivable, that it's still a recommendation to still apply for the PPP, but it's going to have an effect or an impact on what the SBA, which one the SBA approves. Dom, your take on that?
So if you apply for both, the portion that's forgivable, so your portion that's ultimately forgivable might change depending on what you get from the economic disaster loan, right? So some of you may have heard about a $10,000 emergency payment from the EIDL. That is still the viable path if you apply for both. However, it has been said that, as an example, that $10K payment you would get from just applying for the EIDL will be netted against your forgivable portion for your PPP. I'd say broadly too, advice for trying to decide whether or not you want to apply for EIDL is take a step back and think about what this program was designed to do before the virus, right? This was designed to help businesses and sole proprietors who had been impacted by most often a natural disaster, right? There's questions on the old application if you had any familiarity with it. They'd ask about what was the amount of property that was insured and what kind of proceeds you recovered. So this is, in the spirit of this, is to help businesses who have been severely impacted. In this guidance for EIDLs in the coronavirus era, there is mention of proving significant hardship. And the example I had read was showing a year over year 50% decline in revenues. I would think that this would mean showing that March 2020 was so significantly worse than March 2019, and that was because of Corona. If that fact pattern fits your business, you may be better off applying for EIDLs are a longer term, right? It's not just 2 years. It can be much longer than that, up to 30 years. You've been severely impacted. You may not have, they also stipulate that you don't have access to credit elsewhere. Now that means you've applied somewhere and were turned down. And that could be for a larger amount of money too. So like I said, there's nothing preventing you from applying for both. It can't hurt. But I think that's what the EIDL is more intended for business who have been impacted in a severe and very significant way.
John and Dom, there's a number of questions coming in where we're all hitting on the forgiveness piece. So maybe let's hit that again, and I'll ask some specific questions. But it seems like we need.
Yeah, I'm seeing a lot of questions about the 75%. So I'll try to frame this up as an example here, right? So let's say I do my monthly payroll calc and everything's accurate, and I get approved for a $200,000 loan. The rules of the SBA is, okay, you're going to apply for forgiveness in a few months for this. What we're going to do is from the day you get that $200,000, you start an 8-week period. In that 8-week period, you are allowed to just generally use the money for payroll, health insurance, retirement benefits, state and local taxes, mortgage interest on pre-existing debt, rent or lease agreements, and utilities, right? Those are I think actually 8 categories that you are allowed to spend this money on, period. Now that's just what you're allowed to spend it on. You track all that, you're going to be asked by your bank to prove support for how much the mortgage was. You might have to, a lease agreement or a mortgage contract, prove out your payments, prove out your payroll. So, okay, let's say June 30th, roughly is when we're going to be applying for forgiveness comes through. And of that $200,000, the way the math just worked out, and forgive me, I'm rounding off some numbers here, but say $125,000 were used for payroll and $75,000 were used for everything else. The SBA is going to review your forgiveness application and say, okay, well, first things first, you did use your $200,000 appropriately. There's no issue there. You used it for funds that we said you could use it for. This all makes sense to us. Okay, great. However, I know I'm pretending I'm the SBA here. I know we said that part of this loan might be forgivable. But the guidance we're issuing right now is of that $200,000 we gave you back in April, we wanted you to use at least 75% of it on payroll. And in our example, the business owner did not use 75% of it on payroll, right? So they're saying, okay, you have to use a minimum of 75%. And if you only use 75% on payroll, that last quarter is not going to be forgivable. So they're going to take that. In this example, it's a little bit more than that, right? It's 75K, and they're saying, okay, you got to pay back the 75K to the SBA within a 2-year period, and it will have already been accruing interest and will continue to accrue interest at 1% until it's paid off. Now, the payment terms are very advantageous. There's no typical SBA loans, you're not able to prepay them. You can pay these ahead of time. Certain fees have been waived in this process, so it's still a very good deal. But you will have to pay whatever portion of that loan, that quarter that you didn't use for payroll, it won't be forgiven.
So, Dom, let me follow up a question, and maybe we can take that same example and walk through what a compliant, case would look like. Somebody who did it the right way, and then whether or not, because I think this is what I'm seeing in some of the questions, whether or not that part that wasn't directly used for payroll, that let's say if they did it the right way and spent the 75 on payroll or 80% on payroll, the one question is that other 20 to 25%, if maybe they used it on rent or utilities or some other form that was allowable, is that part not forgivable, or is it forgivable if they've done the 75% correct?
No, I want to, first of all, I want to say that you're not doing it, you're not spending the money wrongly if you don't spend all of it on payroll, right? If you spend your loan proceeds on the 8 categories or so that I rattled off, you're in compliance. You did this right. What is confusing is, I guess the better way to put it would be if the SBA wanted to if they wanted to make this a grant program, they could have made it a grant program, right? They framed this up as a loan first that could be forgiven. In an ideal world, I mean, you would get 100%. If you had a $200,000 loan and you spent all $200,000 on payroll, everything they said today, that would all be forgiven. But if you spend a portion if your payroll is not $200,000, like if the way the math works out, like you didn't really lose, you didn't fire anyone as part of the COVID or have to lay anyone off, right? But your payroll is just less than what it was in the beginning of 2019. So the math just works out where you're getting approved for kind of a higher amount than what payroll really is today. They're not saying you're doing that wrong. They're just saying, okay, that's fine. You can use the funds for this, and we're providing them very cheaply to you so that you can cover rent for these, for this 8-week period, right? But the primary goal and what they're trying to forgive is payroll. They're trying to prevent, more unemployment than is already going to happen. You're not doing anything wrong by spending the money on rent, but that is not going to be forgivable. So I guess I want to clarify that right and wrong kind of thing and I don't want you to think if the numbers work out where you only spend 60% of the money on payroll, you didn't do anything wrong. It's just that the entire 40% above that is not going to be forgivable, and you have to pay that back over 2 years at 1%.
That helps. Thank you. And I think, is it because they're allowing a loan of up to 2.5 times your monthly, and the 8 weeks is a little less than 2 months? It's that.
Yeah, that's another. You'll notice that some of this is baked in here, right? Like they could have used a factor of 2 if they wanted to, right? So this is all purposeful. They use 2.5, and then they're going to cover it for 8 weeks. So in the case of a growing business, like let's say I use 2019 payroll as my monthly covered period, and my business has grown from the beginning of 19, the beginning of 20. That's going to be good for me, right? My payroll is going to be higher than my average monthly. So it's going to a higher portion of it. I'm more likely to get to 100% there and say that's all forgivable, right? But that's not the only scenario. And they're not saying that if you don't fit that fact pattern, that's a bad thing. It's just, they're not going to forgive if you don't spend at least 75% on payroll. That's at least how they're phrasing it today. I did caveat this whole thing by saying, I'm certain they're going to release other guidance. It would not shock me at all if that 75% number is changed, clarified, add more detail to, and then they have 2.5 months or so to really hash this out. But as of today, they've used that 75% number often. And so that's what I'm building my spreadsheets and my way of tracking and calculating this over the 8 weeks. I'm keeping that in mind, right?
John and Dom, just because I'm seeing so many of these questions, will you walk us through this scenario? A single person company, maybe it's a single member LLC, and they would be the one recipient essentially of the loan, and it would pay for their own salary. Can you just take us through a case and model it however you want, but there's probably 6 or 8 questions that basically follow the same pattern of what is best practice, best strategy for that single member LLC or sole proprietor. How should they be looking at this? What do they do?
So they're eligible. They are going to take prior year's tax returns if they have them, or other bank statements otherwise proving compensation. The $100,000 limit is our interpretation that applies to you, right? So you're going to prove out your salary for the time period that you're applying for. You're going to reach out to the bank. Hopefully your bank is on the SBA approved list. You're going to reach out to that bank. You're going to prove out their payroll. I've seen a lot asking for tax returns, but like I said, you could show another way proving your income, and that is, I mean, it's just similar to a business, right? I mean, what they'll ask for might be a little bit different than some of the stuff we went through earlier for a business, right? But the spirit of it is the same. This law is intended to help you, is intended to cover, you know, up to $100,000, which if my math is good, it's about $8,300 and change a month. It is intended to get you that money, right? So that is our interpretation of it. Of course, if you have other questions or, you know, talk to your CPA, talk to your banker, but that is how we're interpreting it today.
What are some, what would you need to document the owner's compensation in a case like that? Is it literally just?
If it was me, I would take 2019 and I would take my tax return, or if I haven't filed it yet, I would talk to, I guess I'm an accountant, so I'm doing my own taxes. Who am I kidding? I would talk to myself and figure out what my Schedule C income would be for 2019. And however I figure that out and would give it to my accountant, I would give that to the bank, whatever that worksheet looks like. If it's bank statements, if it's canceled checks, there's not one perfect or right answer. And kind of, if you've been working with this bank a lot, like they're going to be familiar with your business. They're going to know you. So any of the above there.
Yeah.
Mason, let me interrupt.
Sorry.
Yeah. One good question, I think, for a business that's already gone through hardship and they've laid everybody off. So a couple of different questions. They had 5 employees, 10 employees in 2019. And now it's just, they're down to themselves and like one other person. You know, so in that equation, would you agree, Dom, that, you know, they're going to be able to proof up a loan based on their 2019 numbers?
You are allowed to apply. You are allowed to apply for the loan still, and so long as in good faith, the reason you're applying for the loan is you're intending to bring people back. Keep in mind this bill is designed to maintain payroll, to maintain employment, right?
Right. And so maybe in their trade that they're in, it takes them 3 months to actually recruit and get those people back. They're not going to have any hard numbers on the forgiveness application, but more than likely 100% or a very high percentage of the loan will convert, will stay as a loan and not.
Yeah. So as kind of you alluded to, the best case scenario would be to, you know, rehire all the same people you let go. Obviously that's not always possible. I have seen both. I don't think this is stay tuned for more guidance here. I've seen that you need to hire people within 30 days. And I've also seen that you have until June 30th to rehire. So there's a little bit of gray area there, but as John mentioned, yes, the worst case scenario there is that the loan won't be forgiven, right? So you're going to use the funds as essentially a 1% 2-year term advance to bring staff back during this process.
To that point, it says if I pay my furloughed employees before I get my loan, will the retroactive wages I paid be eligible for forgiveness? This person laid off everyone on March 21. So in other words, they apply, they want to bring back people as soon as possible. If they start paying before the loan comes in, can they look back to that time period and count that?
The look back period is only going to be the 8 weeks after you receive money. So it's not going to be retroactive.
So the strategy then would be to apply for it to come in and then bring the people back to work.
Yes.
Or regardless of the strategy, it's just the 8 weeks for forgiveness is going to run from the date the loan is funded. Let's talk a little bit about the state of the country and applications. Like Wells Fargo stopped taking applications Monday morning. They ran through their $10 billion in allotment. Dom, will you address kind of, you know, what people are to do if they don't have a direct banking relationship with someone that's knowledgeable? You know, we can opine about whether there's going to be an additional $250 billion or not, but nobody knows that it's possible. But we know this money is going to go quick. But what should employers and business owners be doing now? Best practices given what's happened over the last 5 days.
Sure. I wish I had a silver bullet answer for what are you to do if the bank that you work with consistently, if you call them right after this call today and they say, hey, we're not taking applications anymore, sorry. I wish I had a great answer for what you can do there, but unfortunately, as far as applying for this PPP program, you'd have to get on the phone and start calling other banks and talking to people in your community and seeing if they know of someone who's still taking applications still. I will say, no, we don't want to count on the fact that there's going to be additional stimulus. I mean, nothing is certain, but it sure seems that the tailwinds are going that way, right? And even if you strike out, let's say you just happen to be a little too late to work with your bank and for one reason or another, you can't find another bank to work with for this program, is my opinion that it would still be advantageous for you to gather some of this information, to figure out what your average monthly payroll for 2019 or for the trailing 12 months, starting from the most recent pay period, maybe last week or the week before, figuring out what that is, getting your tax return squared away if you're a sole proprietorship and getting ready to apply for perhaps a phase 2 of this. I don't think yes, it's a little bit extra work, and I know we all have really busy schedules and a lot going on, and many of us are juggling work, home, kids at school all at the same time. But if you strike out on this round, of course we feel for you. But I'd say get ready for round 2. I don't think this is going to be the end of SBA money coming from the government here. And I wouldn't just throw your hands up and say, well, we tried, it's too bad, I guess we're gonna have to lay everyone off. Like I'd be diligent here and try to stay organized and be ready for the next wave.
There are also a number of companies that aggregate and have access to tens or dozens or of lenders that are SBA lenders. And so if anybody emails Dom or I, in the coming days, we're happy to fill in the blank on those organizations if you find yourself to be stuck with your existing bank, either because they've shut down because of resources or you don't technically have a checking account. You can certainly try other institutions, but at this point it may be advisable to get to an SBA lender that packages and has direct access. Those companies will know who has bandwidth left under the PPP program.
John, Dom, it looks like we're right at the hour, a little bit over. We've answered almost 80 questions. There's just been an incredible amount.
Sorry if I couldn't get you. I tried to type out as many answers as I could.
Yeah, no, I think you guys have done a phenomenal job of helping small businesses and our member firms in the communities that we represent around the country. We just thank you for what you're doing. Are there last thoughts as we go? And then I'll pull up a screen that shows, again, that Facebook group where this information will be recorded. And then obviously, John, you mentioned getting in touch. And so we'll try to put that information as well.
Yeah, I think fundamentally, I'm confident that there might be more funds, that the $350 billion was not enough, and that the country is, going to continue to try and solve the problem of unemployment. And so if you've missed the window or your bank is not cooperating, I would get on the stick and get organized. So if there's another window of applications, perhaps open a second business relationship with a bank that is a good SBA lender if it's really important, or go straight to the EIDL and 7A loan process, because those SBA loans will also have favorable terms, 2.5%, 3.5%, in that. So fundamentally, this is going to go very quickly, but take the time now as a business owner to have all of this information, readily available. Dom, any last words?
Just echoing what you just said and emphasizing that this may be the new normal for how the SBA conducts business. I mean, this was not to say that we're going to have a virus or anything every year, but the amount of volume of transactions being done by the SBA this year increased, I think, 30x year over year. So this might be the time, if your bank is not being cooperative or doesn't play well with the SBA, I would emphasize that this might be the time to look at new banking relationships with someone that does, because programs like this might come up more often in the future, even if it's not a virus-related stimulus, just other good, cheap money.
And out of precaution, I will just say before we end it, I'm actually going to take an extra few minutes. Everyone can drop off if it's the end of the webinar, but I'm going to go through and type out as many answers that are there for those people that have access to that. So if you still have questions and don't feel like they've been answered, Dom and I are going to stay on for additional 5 to 10 minutes and just answer in the chat forum so that we get as many answers as we possibly can out. Okay. Thank you very much. And stay safe, your families. Thank you. And thank you, Injury Board, for bringing this together.
So just real quick for the Facebook group, you see the address on your screen, facebook.com/groups/injury board. And as John and Dom had said, that they're graciously going to stay. So we'll end the formal webinar here at 2:05. Tom, it sounds like you have a final note too, as we do. And then, as they've said, they'll stay on for a couple moments. They'll use the Q&A feature, and so that will still be accessible to participants. And Judy at Injury Board, if we can just leave the channel open, that should take care of the mechanics on it. Tom?
Yeah, no, I just wanted to thank our panelists, Dom and John, and you, Mason, as well. And I'm noting several dozen questions still and some chats as well. So thank you guys for willing to stay on, and hopefully this has been helpful for everyone.
It's an important time. Thank you, Tom. Thank you, Injury Board. Thank you, Injury Board members, including John and Dom, who are volunteering their time. And again, they're not connected with banks in any way. They're just small business owners like we all are, and trying to get some answers. So we'll turn this back over to them. They'll answer some Q&A, and you can do it live, John and Dom, in the room as well. Thank you all.
Dom, are you still on mute?
No, I'm here.
Question about the 401k that may be appropriate to live answer.
Patricia, I just messaged her back. I should start at the bottom of this list probably.
Yeah, I'm starting at the top. So
all right, I'll scroll down. I just messaged her back, but I said that's a great question. I have not seen any specific recommendation, but what I've read and my interpretation of it is to take it on a cash basis, right? So
Right.
the 2018 contributions actually paid in 2019, I would use your 2019 cash for your monthly payroll.
Another question, Brian, husband, wife, LLC with 2 employees. How do you document your owner's draw? Just again,
I don't think there's a good answer for that. I mean, that's you're gonna have to get a
bank records. You know, if you have an LLC and it's an operating account, how, regardless of what, there are a lot of businesses out there that don't file taxes because they didn't make money.
Right.
So it's still the transference of money to your personal bank account would represent payment to an owner. Personally, I would include that. If the SBA promulgates some regulations out over the next 8 weeks that says that that's not going to be forgiven, then you borrowed money at 1%. And if your family needs it, your business needs it, it's better to borrow and have it and not need it than to just be running out of cash.
We never mentioned
Question
nonprofits.
about
Someone
employee
asked about nonprofits. Those are
Nonprofits
covered.
are included. I did see that question. A nonprofit is an organization, business that's eligible and can apply. If you dismissed employees or you already did layoffs, that's going to factor into your forgiveness, but you're still going to be able to use those numbers while they were employed, either for your trailing 12 or for 2019. You applied for the SBA grant, assuming you mean the EIDL 10K. That is a grant supposed to be paid within 3 days, and you applied 2 weeks ago. So the 3 days obviously didn't happen. We don't know. We don't have any specific information about timeline for either EIDL grants or PPP. It's however long it takes the SBA to process these.
The only thing I'll add is, I mean, I read a number somewhere. I don't know if this is where this was verified, that $70 billion has already been transacted. So I saw that in Wall Street Journal this morning. And the other thing, just a little, as an example, our company applied Sunday morning, like bright and early, like 6:30. I have a newborn. And I just received a notification in my email during this presentation that my application is being formally reviewed now. So that was a 2.5-3 day turnaround. So
yeah, there wasn't a question about 20% of wages. The 20% number that's being thrown around is regarding ownership percentage. Dom, you want to take that?
I'm sorry, say that again. Apologize.
It's okay. The question is, what does the 20% have to do with? Where in the regulations?
Reduction. Yeah, it's so it's like a 2-pronged test to make sure. So one of the in order to get the loan forgiven, you're gonna need to pass like a 2-pronged test. One of those is just tracking number of FTEs. I mentioned this really quickly, but you might look back at like January of 2020, let's say, and you'll do an FTE calc then, and then compare it to the 8-week period, and they'll say, okay, you need to make sure you maintained at least. Otherwise, if you're down 10%, let's say 10% of your loan is just automatically not going to be forgiven. The 20% is the other prong of this. So you can't get around FTE requirements by slashing salary. Like they're trying to avoid you saying, okay, well, I didn't lay off this person, but we cut their salary in half. The SBA is saying for this purpose, and if you want to get this loan forgiven, we're treating a significant salary reduction like that the same as reducing an FTE.
Dom, have you seen, there's a couple of questions on personal banks versus business accounts. There's nothing in the regulations that says that it has to be a business account. That's the base.
There's nothing in the regulations saying, if Steve Mnuchin had his way, I think every bank would help service every individual in the country. the banks are coming up with, they need to draw a line in the sand somewhere for who can we help, who can we not help, just a supply and demand thing, right? There's more people asking than they can feasibly help.
Yep.
So that's where the business checking requirements came up. Personal checking. So, I mean, I think it's worth at least a phone call to a relationship banker at whatever bank you're working with saying, hey, I have a personal checking account. Like, can that count for anything? And see if you maybe fall on some empathetic ears. But no, that's a bank rule.
I'm answering this question, but I'll answer for anybody that's still on. What if the single member LLC is an independent contractor for some other firm? So the business entity, the single member LLC, is an organization that's eligible to apply if it meets all the criteria. It doesn't matter what your source of revenue is. The other business that's paying you as an independent contractor can include those payments to you. But if you've received that revenue and you're an single member LLC, then apply away.
All right, 107 questions answered.
Okay, we got through it. Anything left on the chat, Dom? I think we got through most of that.
Good question. There is nothing saying that you can't do that.
Putting my email on the chat for anybody that needs it. 2 more questions. Do you include the employer's add-on? So,
Amy, hold on. Amy, let me get a good answer for you. There is guidance on the Treasury website about this. I just want to make sure I have the days right. I want to say you take your payroll from 1/1/20 to 2/15/20 and do the calculation that way. I'm not, I don't, it's on the Treasury website somewhere though, Amy. And
long-term care, Dom, included?
I'm sorry?
Long-term care included, yes or no?
Is the separate, is insurance policy, I'm thinking like Aflac or something?
I think it would be included.
I would say no.
Okay. Applying twice or through
Don't-
2 different banks.
Don't do
We got
it.
that on our last webinar. I actually think that the SBA may flag duplicate applications by tax ID number, and you may be hurting your chances. We don't know. I just think that once the SBA gives you an SBA loan number, that they're not going to see, they're going to see a follow-on application from a separate bank. They may flag it or put it at the bottom of the list. I don't know. Just got to think about what government workers would do in this environment.
Yeah.
Did you answer Amy's question on the annual revenue?
Yeah, I answered it out loud. I know the answer is on the Treasury website somewhere. I'm trying to find it. I can't find it.
Yes, I would make the assumption though that if it's just 1 month of revenue, that's your monthly average. You don't have a full year. You can prorate it to estimate what an annual business revenue would be. So say you had $50,000 in 1 month, then you can make the assumption, put a note in the application that you're estimating what your annual revenue would be, estimated that $600,000, but that you only have proof for 1 month.
I'm sending that link now. I'm preparing the materials, John, for everyone to get sent after the fact too. Yeah, it's just Amy, you're probably gonna have, you can still estimate annual revenue in the same way, right? Even if it wasn't in January, you can still do March. If you didn't have payroll until March, then you probably don't qualify for this. But I don't have the numbers in front of me, but I'm almost positive you can't apply for it if you didn't have payroll until March 2020. It's 2/15/20 is the cutoff. So yeah, John, I'm going to send, well, the deck is going to get sent, a couple of useful links, and then my outline that I was walking through that kind of
good.
expands on the slide.
We got through all the chat and we got through all the questions. So I think that's a wrap.
Right.
Thank you for the 53 people that are still belaboring this portion of it. But
Or they fell asleep.
stay safe. Fly early. Good luck, everyone.
Thanks, Dom.
You're welcome.
What's that?